Hi, everyone. It is Thursday, January 26, 2023. Welcome to TechTO Quick Takes. I'm your host, Alex Reilly, and here are today's headlines. Atomicjar opens a 25 million US dollar round and reinforces a new trend of partially building in Canada. Tiny to the rescue of WeCommerce. We will discuss further. Magnet Forensics attracts private equity. And for our lightning round, we'll tap into Accord's 10 million US dollar round. And I will invite Alex Norman. Alex.
Hey Alex, how you doing?
Good. How are you?
Not as good as you. You got those palm trees in the background.
I was going to say this is not a virtual background, which is kind of nice.
What part of Canada is that?
A non-existent part of Canada.
That's okay. Look, it's going to be interesting. I'm starting to see news pick up a bit again, and not all negative news, even though that's all the media wants to report on. So we
Exactly.
got some great news to report on today, or
We
mostly great
do.
news.
We do. And we also have a guest joining us today, which is very exciting. Our first guest on the show of 2023. So I'll let you intro that, but we're going to start with the Atomicjar news and just what that means for hiring within Canada and what they're trying to do from the raise. So Alex, you can take it
Yeah.
away.
So before I ask, Ellie's joining us, but before we thank you for joining us. But before we get into asking you questions, maybe some context of what's happening. Earlier this week, Atomicjar announced that you raised 25 million USD, led by Insight Partners, with participation from Bold Start Ventures, Tribe Capital, and many others. Your company's behind an open source software called Test Containers that helps companies test software. While your company's based in the US, you're based in Canada, and you mentioned that you're going to be staffing up in Canada. And it's an interesting trend we're seeing a lot of in Canada. So before we get into that trend, I'd like you to give a bit more context. Thanks for joining us. Tell us who you are.
Awesome. I'm Eli. I'm one of the co-founders of Atomicjar. Indeed, we are the company behind Test Containers, the open source framework for making testing much easier. We've announced that we have about 100 million downloads of our software. Over half of it has happened in the last 8 months. So the open source software is really picking up its momentum. We've announced $25 million round earlier this week. We've also, as you've said, announced that we are going to be staffing up in Canada, which we're super, super excited about. The company is remote first. We have actually 23 people from 10 countries at this point. So we are completely distributed. My co-founder and I are split between the US and Canada. And we are actively looking to stuff up on engineering talent and go-to-market talent.
Well, I love that. So there's a lot to parse there. But first, tell us a bit about your background, because there's different types of founders. There's some that's come out of University of Waterloo, started a company at 21. There's some that have a bit more experience. You're on a bit more experience. So tell us your background, what you did before co-founding this company.
Unfortunately, I'm no longer 21.
I couldn't tell.
I know. I appreciate the flattery. Thank you. No, so I was one of the early engineers at the AWS. So I've joined AWS right out of school. Back in the day, where all of AWS could fit into a single conference room. At the time, we had no clue that this is going to become as big as it has become. After AWS, I've done work primarily in this developer-focused space. Right, I worked primarily on developer tools. I worked primarily for making developers more productive. Most recently, I worked at Pivotal through the Extreme Labs acquisition, for all of the Extreme folks that remember that. And then at VMware through the Pivotal acquisition. Most recently, I built a managed service for the Spring framework. So we've partnered with Azure and built Azure Spring Apps, which is a managed service for people who build with Spring. Through that experience, I've actually met my co-founder for Atomicjar. So Sergey and I worked together with the Spring team. Sergey was on the Spring team, and that's how we got to know each other. This is how I got to learn about this project that Sergey was working on, which is Test Containers. And when Sergey quit and went to do his company, it was a no-brainer for me to go and join him.
I love that. And so you met Sergey. You basically co-founded the distributed or remote first team. It's sort of trendy now, but when you launched, what were the challenges being a distributed co-founder team?
Oh, the challenges are all around. None of the systems are really built for distributed teams nowadays. You would think like even simple things, shipping laptops to team members, right? You would think no brainer, just like ship it. But well, surprise, shipping laptops to like Eastern Europe or Germany or India is really tough. And then figuring out all like none of the systems are really built for fully distributed teams, right? The legislation is
Yeah.
not built. Everything is not built for this. So we had to invest very heavily into operations. We had to invest very heavily into actually employ so what we have is we have someone who is dedicated into employee experience, right? Because for us, making sure that we have the right culture, making sure that people feel part of the team is core and super super important. While we are a completely distributed team, and we don't spend money on real estate, we don't have an office, we do spend that money on travel and making sure we see each other and making sure we do amazing offsites with the team and bring the whole team together. So like there's a bunch of different aspects to this of building a culture, building a company with a remote first team. And this is very much I guess this is also because we're building a team based on open source technology. Open source, anyone can contribute to open source, regardless where they are in the world. So we're trying to take that ethos and build around it, build a company around this. Many of the early employees are contributors to test containers, and they just decided they self-selected to contribute, and hence we are excited for them being part of the company. And and that's how we ended up with 23 employees in 10 countries.
I love that people are basically self-selecting to be employees by contributing. So maybe take a step back. What's the problem that test containers solves? So for people that are not familiar with them,
In the simplest terms, test containers makes it easy to do makes it easier to do software testing. It's a tool for developers to make it such that they can create integration tests as simple as writing unit tests. So one way of envisioning it, typically unit tests that developers write are done in isolation. They have no dependencies. Test containers makes it simple for you to write a unit test and say, hey, when you run this unit test, I want an instance of Kafka, an instance of Redis, an instance of any other dependency. And what it would do is it would, in the background, bring up all of those dependencies, test your code around against them, and then when you're done, it will remove them. Right?
Excellent.
So it allows you to create self-contained tests that have dependencies with them, and it supports a wide variety of technologies. It supports in this pattern. This pattern started from Java, but it is now available in 8 different languages. And people really embrace it because up until now, if you wanted to do any type of integration testing, you had to rely on a centralized environment. And those environments were flaky, those environments were not always available, and so on and so forth. That with test containers, you can do those tests completely on your own. You can do those tests on your laptop, in CI, anywhere you want. And the test is self-contained, it's repeatable, it's idempotent, and that's why it's picking up in popularity.
So I love it. You're making testing better. What's interesting here is you went with an open source project approach.
Yes.
We don't see many open source projects based out of Canada, or that I can think of one or two offhand. But why launch as an open source? What's the benefits? What's the disadvantages?
The benefits, of course, distribution and the fact that you can get to developers and it's free to try and it's awesome. The negative is you have to make money somehow, right?
Yeah.
Like people do not make
so
money
how do you do
free.
that? How do you do that?
So there's actually lots of approaches in the world around how to make money out of open source, right? So lots of different companies do different things. One of the things that we decided is we wanted to build for the open source community. So our commercial offering makes the open source better. We're not holding up features from the open source. We're just saying, hey, there are certain features that you cannot do just completely on the open source. So our commercial offer is Test Containers Cloud. It is a cloud version which provides resources for those tests, right? So, and what happens as a result of it, if you run the open source version, you're relying on your local machines resources. You're relying on how much memory you have, how much processing power you have. With the cloud version, your tests is exactly the same, but all of a sudden we have the scale of the cloud. So the open source version continues staying open source, completely free. Anyone can try and use it. But once you actually want either more resources or you want consistency, for example, you want consistency between your experience and your teammates' experiences. Well, the cloud makes sense, and that's why people come to us and ask for the cloud version. So what we do is we're saying, hey, look, open source is completely free. Anyone can try. Anyone can use it. In fact, many people use it, right? But then if you want those additional capabilities, which cannot be open sourced, like there is no way they can be open sourced, right? So commercially, we're saying, well, there is a service.
Cool, and so you get, it's almost like almost a try, and if you want this additional functions which you can't do open source, pay us. That's pretty fair. Now just going to touch on one thing, which is especially because we are tech together, we're focused on Canada. You said you're a remote team, but what I see is you seem to be super excited hiring and staffing up in Canada. Why? And which functions do you want to staff up in Canada?
The reality is I'm being local over here. I see the quality of talent and the amount of talent that is available in Canada. My co-founder, who is based in New York but travels here frequently, we see the opportunity here, and we want to expand here, right? Of course, that's the fact that I'm local is awesome for folks. It's easy to go for lunch and all of that stuff. We're going to be staffing specifically. We're looking for cloud engineers. Folks with engineers with experience with building cloud scale products, because clearly what we're building is cloud scale. And then we're looking for go-to-market talent, people who have experience with PLG, people who have experience with product-led growth. Fundamentally, for us as a company, because of the wide community that we have, because we have so many people using the open source technology, our commercial efforts are PLG. So we let people use our technology for free, and then the sales process starts from there. So specifically, those two I guess areas we're looking for people to join us.
Cool. Well, I hope you find people in Toronto, Montreal, Vancouver, anywhere in Canada, and we hope to see them out at the Tech Together events in real life. Ellie, awesome. Thanks for taking time out of your busy day. We'll let you get back on with it.
I will also put some of those jobs again in the show notes, and also just a link to Atomicjar's website, anywhere that you could get in touch with them about that.
Yeah, like I think it's interesting. This is an open source project. We don't talk about them very often on the show, or generally I don't see many in Canada. Usually they're developer first, so a bit more heads down. But and I think Ellie talked a bit about the advantages. It's sort of like your customers help you build your product, you get free distribution, free customers, but then you have to figure out how to monetize it. And it's a bit hard to build a moat because there doesn't seem to be a playbook where each open source company has to figure out a different way to monetize it and hope it's a moat, because it's open source, so anyone can use the basic code. I like what they're doing here to find something unique. And I think there's another larger trend, which is I'm seeing more and more co-founders distributed with someone in Canada, and they pick Canada to basically scale up especially the engineering talent. And it's funny because a lot of large US tech companies over the last 3 years have opened up what we call branch offices here. And there's a lot of pushback saying, oh, these Americans are benefiting from our talent. Yet no one talks about what's going on here. You have probably, I guess, a Delaware incorporated company, most investors are US, and the talent's here. So it's building a company. And hypothetically, the same problem you have with an Amazon building a branch here and employing our people's, having a small scale. I think this is net positive. We're creating employment. We're getting the cutting edge startups being at the beginning, sort of having equal footing in Canada. But I think if this continues, you might see a bit of political backlash because, which I think might be foolish. But
we have a lot we want to cover today.
Sure.
So do you want to just jump into the rest of it?
Yeah, let's go. Sorry.
Okay. So we touched on this yesterday in our newsletter. Interesting perspective on just the tiny WeCommerce news. I'm interested to know further what your opinion is on this, because I'll let you just dive in, maybe just high level what the news is first, in case people, did not read yesterday's newsletter or they're unsure what's going on. So just maybe dive into what the news is.
So just a quick thing. If you're not reading our newsletter, you should subscribe. And if you missed yesterday's, you can go to our website and find it. But basically, earlier this week, WeCommerce announced that it had entered an agreement with Tiny, and that a WeCommerce and a WeCommerce subsidiary to combine their business in an all-share transaction.
Yeah. So okay, this is interesting because it's essentially like a reverse merger. So what does this mean? What's your perspective on this?
Yeah. So a bit of background here. WeCommerce is a publicly traded company that is trying to roll up Shopify stores. It was spun out by Tiny, and Tiny is this holding corporation based out of Victoria with about 50 plus, 80 plus companies that they've invested in, acquired, or started. WeCommerce being one of it. And what's happening in this merger is, usually when you hear a merger and acquisition, it's a merger of equal, or the company that's public is taking the majority. Here, Tiny is going to own basically 75% of the new company. So, and the CEO, the co-founders of Tiny are going to be the CEO. So what you have here is a company that will have a supposed equity value of 800 million plus, and the company that's getting acquired is the one that's going to have the more shares. They're going to have to take control of the ownership. So it's basically, when you hear merger, you usually think the person that's public is going to be have all the positions of power or more, and here it's the opposite.
So just to kind of circle back, what does WeCommerce do specifically, if folks don't understand what they're doing?
So you've seen a bunch of these companies start in the last few years, and this is something that comes out of private equity that went to venture. So what a roll-up is saying, hey, there's an industry with lots of small companies, and what we're going to do is create an entity, and we're going to have these shares, and we're going to buy these companies. And the reason this makes sense is small companies in the mind of investors are much more risky because they don't have this huge revenue base. They don't have, if they're in this case, they were buying Shopify apps. If one app, people need less CRM for Shopify, that company's risky. So what you can do with a roll-up is you can pay, let's call it 3 times, let's keep it simple, 3 times revenue. Because, and then what you're doing is, after you acquire it, you're creating value because you're taking out fixed cost or cross. So if you have 20 of these apps, maybe you have one finance person instead of each of these companies having finance. So you improve the margins. You have best in practice growth plans, so you can grow the revenue better. And because you're a bigger entity, you should immediately create value because you should be trading at a higher revenue multiple. So maybe you trade at 5. So hypothetically, just to give you an example, if you buy a company for, let's call it, $3 million, because it has 1 million revenue, and you make it go to 1.5, and you're trading at 5, now it's worth 7.5 for your shareholders. Again, I have a much better explanation of this in the newsletter, but so what they were doing, looking for Shopify apps, buying them and combining them.
Oh, also just going back to the newsletter, there was a really good rundown of that question specifically. So I'll link to the web version if anyone wants to read more in depth about that. So if I understand what you're saying, Tiny and WeCommerce were a part of Tiny. So why are they merging if they were a part of them? So
WeCommerce went public.
Yep.
Right. And if you look at it, my guess is they're merging because the tech roll-up model is not nearly, it's out of favor right now with investors. So it's, and if you look at the price of WeCommerce, I think it was down like 90+% from its high of all time. So Tiny's either looking at this as it wants to either protect the value created by creating this company and letting it go public, and probably take advantage of a lower valuation to reacquire it at what it thinks is below its intrinsic value. So this, sort of like they spun out WeCommerce at a good time to spin companies out in this space, and they're now buying it when it's, it's probably advantageous time to, play back. So it's taking advantage of the market, market movements.
Yeah, and one of the things that was mentioned yesterday in the newsletter was the tech roll-up model now being out of favor. So why is the roll-up model out of favor? Like, what does that mean also?
So I think there's a few things. First, as you may have noticed, interest rates have gone up, right? So if lots of these companies use debt to acquire these companies, and your basically cost of goods has gone up. Your interest went from being 1% to 6%. So now if you're spending $1 million, you right away have a higher burden to create value. And not only has it gone up, but the people that are actually providing this lending are a bit more cautious. So now you have to pay more for the debt you get, and it's harder to get it. Second of all, there was when this went public, everyone was saying e-commerce growth is accelerated, it's going to continue accelerating. But if actually post-COVID, it was a retrenchment back to the long-term trend line. It's still growing, but you had almost had an extreme slowdown. So the value of the future revenues, down, the multiples are down, which means arbitrage is less exciting. And there's actually quite a few companies that launch rollout models, which push the prices acquisitions higher. So you've got something that's more expensive to do, and your ability, you got headwinds opposed to tailwinds, and the arbitrage between what you're paying and what you're valued at is shrunk. So all those things really hammered this sector.
And we spoke about this before. Just WeCommerce going public was based on opportunistic market timing. So why does it make sense for the companies to merge, especially right now?
I think it makes sense for them. It basically allows them to create a more solid company because it's going to still be a public company. Right. But they're diversifying the revenue streams. They're increasing the revenue. It's so I think it changes the story of the stock. Tiny's protecting their previous investment. They're the majority share, so not enough the majority, the biggest shareholder of WeCommerce. So they probably want to see it thrive. So they're probably buying it cheaper than they think it should be at intrinsic value. They want to protect their value. And now the public perception of this company is going to change because you have WeCommerce with, I don't know how many companies they acquired, plus let's call it 70 other entities. So they can now talk about a whole diversified portfolio, and they're probably hopefully see, and you saw it, the shares jumped the day they announced this acquisition or this merger.
Yeah. And just lastly, before we move on, one of the things we didn't include yesterday, because we were really encouraging folks to, tune in and listen live or catch the episode later, was just the lessons for our readers, our listeners, anyone within our community. Why does this news matter to anyone following the podcast?
So, I had two takeaways. First, if you go back to 2020, 2021, investors valued most companies with similar multiples and only cared about revenue growth. They did not really discriminate between organic growth. Hey, word of mouth, this is a great product, I should go use it. Paid growth, Facebook, something like we're growing by Facebook ads, or growth through acquisitions. Big scaled up companies probably use all three levers to grow. But each growth strategy has different margins, has different difficulties in maintaining the growth. So all else being equal, a company that grew organically should be more valuable and have a higher multiple than one that's going through acquisition. In the current market, we're starting to see discrimination against, investors looking at how are you growing, what's driving that revenue, and putting different multiples on it. So that's one reason I think WeCommerce fell, just because people are like, hey, this acquisition growth can be expensive, it's risky, it's done, by chunks. So, you're seeing the market discipline play out, and you're going to see that. That's where you're going to see some winners. Some companies continue getting high multiples, and some get compressed because market's going back to fundamentals. And I think the other thing is, I say this almost every recording.
Yeah.
Don't chase trends.
Yeah.
While they're easier to finance, look, WeCommerce went public. Hey, e-commerce is great. Shopify is great.
Yeah.
There's lots of investor demand for that. In the short run, it makes sense. In the long run, it's just as hard to build those businesses, if not harder, because once it goes out of favor, people don't, you have to go prove that the past assumptions of something hot was great. So just, if building a business is hard, and if you're not passionate about it, it just makes it so much harder. So don't chase trends, do something you want to do.
I was just going to say, be passionate about the space. I completely agree, because it's a long road if you're not fully invested yourself in what it is you're doing. So I'm glad that you do bring that up quite often, because it seems easy enough to just chase what people are liking or what is, as you said, trendy right now. So I think that's very good perspective to share with anyone that might be curious. Speaking just specifically about the newsletter, because I know we brought it up a ton just in that last segment. If you did miss yesterday's full breakdown of that story, you can, as I said, I'll share the web version. But if you haven't subscribed and you would like to, you can do so at techto.org/newsletter. We have completely revamped the formatting, the content. It's a lot more of those, companies that you might not be familiar with. Companies that we're learning a lot about too, that I know personally I had no idea even existed, and they have such a cool story. So I'm glad to even be a subscriber and be able to contribute to sharing that with our community. Is there anything that you're really liking right now, Alex?
Well, we one thing we just brought back because of demand is founder dating or co-founder dating.
Yep.
So we always get these emails after newsletter. Hey, do you know anyone I can hire that's technical to be co-founder in this idea? So we,
Yep.
instead of us just keeping all this good knowledge to ourselves, we're trying to feature one co-founder opportunity per newsletter if we have them. So again, our why we Tech Together exist and Tech Toronto exists is to help push this ecosystem forward. So if you're looking for a co-founder, feel free to email us, and you may be featured in the next
Exactly.
email.
Yeah, and a co-founder is a very vital piece, obviously, to an organization. So we want to do our part to help great founders find, I guess, their counterpart in business. So I'll also link if you do want to reach out and let us know if you're looking. I'll put the contact in there too. So next headline to dive into is the Magnet Forensics news and attracting private equity. So two-parter question to kick things off. What is the news, and what does Magnet Forensics do?
Okay, so I think it was last week now, Waterloo-based Magnet Forensics agreed to sell itself to the private equity firm Thoma Bravo, and then merge itself with one of their portfolio companies. And so for people that don't know what Magnet Forensics does, they are a company that, they describe as they use data analytics software used for digital forensics investigations to public sector and private enterprises. So basically what that means is the company has a bunch of software that lets enforcement agencies and large enterprises find evidence of malfeasance, illegal activities by basically looking at the digital breadcrumbs and getting the evidence. And this is something that probably didn't matter about 10, 20 years ago, but now, they can go through all your devices and figure out what you did wrong. And give you some context, they went public in 2021 on the TSX, and they were one of the more successful IPOs, as they've had both growth and profitability. In the last quarter, they had 25 million of revenue, 1.4 million of net income. Their shares have fallen, but they fared much better than most of the other IPOs.
That explains a lot of the attracting the private equity. So a few reasons why I think this is notable about the transaction. So maybe you just dive into why you think it's notable.
So the rumors are that Magnet tried to buy the company is going to be merging with Grayshift. So if this rumor is true, they were outbid by Thoma Bravo, and it must have been a really strategic acquisition, because after being outbid, they're now selling and merging there. So there has to be some very big strategic rationale it seems like Thoma was able to use one acquisition to get two, which is very interesting. The founders, and again, going back to this being strategic, will retain 55% of the shares they're receiving. So it's not like they're
one of the things I found interesting.
Yeah, like it's not like they're getting money and saying, okay, peace out, I'm going to invest and rest. They're
Yeah.
like, okay, we'll roll over 55%.
Exactly.
And, because that means they believe there's huge upside still. And, despite performing relatively well in the public markets, they were open to going private via an acquisition, which is interesting. And the deal's 3 times more, like higher value, or bigger. I don't know what the right, than the largest acquisition in the Waterloo region, which was a 562 million acquisition of Sandvine a couple of years ago, or maybe 4 years ago now, by another PE shop. So the Waterloo region, just when you think it's been quiet, bam, they get they give their biggest the biggest they get one of the companies for the biggest acquisitions in the town ever, or the region.
Yeah. Those were the two things I found interesting, was just the shares the founders were retaining, and then also just how big the deal was in itself. What's your take further on the transaction?
This one, opposed to one we just talked about, WeCommerce Tiny, which I think was done from position of weakness. From position of weakness, this is a deal that's done from position of strength. Magnet did not have to get acquired. They were growing well. They were growing fast. They were profitable. They're in an area with significant headwinds. Significant tailwinds. My mistake, getting my wins confused today. And what they had here is they said, okay, let's do this merger because it enables us to build a stronger company. It's we get to take money off the table, and at a relatively decent multiple, at 20 times revenue. So it this is one that didn't have to happen, and they decided to do it. That's always why you want to be in a position of strength, and it also shows how one scaled tech company can impact a region for a long time. This company had so many ties to BlackBerry, including Jim Bellizzi as chairman. My guess is you're going to see another company emerge from the Magnet alumni.
And just lastly, before we move on to our final headline, I mean, there is still, some, as you say, like doom and gloom within the Canadian tech sector. We're obviously still not having entirely good news across the board, but obviously this is really great to hear that, especially a company out of Waterloo has achieved this, and that it is one of the larger deals that we've seen. So what are your thoughts for the community, and how this is a further positive thing for Canadian tech?
Well, I agree with you. Especially there's a sense of doom and gloom in the community and media. Right now every news is bad news. I understand why, but again, you have to take it, and again, we are cheerleaders of the ecosystem, so maybe take with what a grain of salt. But if you take a step back and look at the long-term trajectory of our ecosystem across this country, we look almost like a startup you want. It was like flat for rounds, flat for exits, and all of a sudden it's going exponentially. So you get hiccups along the way, but generally there's still great things going on. Some of our unicorns may not make it out of this current recession or current downturn, but you just got your biggest exit in Waterloo. You still got record amount of funding going there. We're going to be on pace to beat the Toronto Waterloo regions, on pace to be employing more tech people in the Bay Area. Generally, things are going in the right direction for this ecosystem. So that's the first thing. Second thing is, if you're interested in cybersecurity, that's also an area where you see the long-term growth trajectory is not slowing down. So, and we have lots of talent there. So that's another thing that benefits our country. And finally, just as I touched upon when talking to Atomicjar, a lot of times we get politicians or some of the leaders of the community complaining about our southern friends. This is an example of where we benefit from them. The first capital that I can see, venture capital that went into Magnet was from a venture capital firm called InQtel, actually a fund launched and backed by the CIA, probably because they saw the benefit of it. My guess is it would be very hard to get the same valuation and raise money here. So here's a big outcome that was backed by venture capitalists from the States.
I was just going to say, there's going to be a massive hiring wave. Obviously, Atomicjar wanting to build their team here. So it's good to highlight, as you said, we're cheerleaders. There is a lot of good that is happening within the ecosystem that I think outweighs the negative that we are seeing. Quickly, just before we wrap things up, lightning round. I also am very excited about this segment because there's a TechTO connection within this headline as well. So Accord raises 10 million US. So what's the news? Why is this notable? And just share more about the TechTO.
Quickly, Accord is a collaboration platform designed to support business-to-business sales. So it helps basically organize your business-to-business sales. They raised around from Matrix and Y Combinator. The company was founded by two brothers, and the third co-founder was brought in after a guy. The brothers are Ross and Ryan Rich. One was the first, Ross was one of the first salespeople at Stripe. Ryan was one of the early sales hires at Google Cloud, so they definitely know sales. What's interesting, the brothers are from Toronto. Ross has returned home, is an active TechTO Insider. So
we love
congratulations, Ross, and you'll probably see him at our events. And just like Atomicjar, they're part of this trend. That, this is a company based in the States. A couple of co-founders live in the States, but one living in Toronto. And again, there has been no public declarations, but I know from talking with Ross, they're very excited to step up here. So, just love to see someone choosing Toronto to come back home, then building the company up here, even though it's financed and based out of the States.
Exactly. And we obviously love to see our what our insiders are doing and really amplify that. So congratulations. That's great news. Before I let you go, we do have a bunch of events coming up. Very exciting. I guess the one that's coming up the quickest would be Montreal, January 31st, 2023. Alex, you're going to be there.
Yes, I am.
What are you most excited for about that?
I actually think we're going to have two incredible segments. First, we have Mark from Unito, who is basically, it actually helps make productivity better and takes all the different SaaS tools and make them work together. And you can learn more about his journey. And I'm excited to talk to him about his culture and how he scaled his business. And then we have two health tech founders, female tech health founders, that we're going to talk about how tech is making healthcare more accessible, more affordable, and the challenges of it. And I think that's going to be very insightful. And all three are powerhouses. So look forward to seeing you there.
Absolutely. And again, tickets available on our website. You'll see it promoted across social as well. And I'll link it in the show notes as well. We have a TechTO Talent coming up on February 22nd, a virtual event. Great place to, meet and interact with other tech talent, meet employers who are actively hiring, or even if you just want to learn from recruiters or anybody that is maybe focusing on tech talent specifically. Great event to attend, and it's free. Also, you can sign up on our website. And another in-person that we have that I do want to share is February 6th at 111. That one is in Toronto. That is going to be, again, another opportunity to just network, meet our insiders. Obviously, Alex and Jason are always at these events too. So it's a great.
It's not about us. It's about the community and the founders. The founders we have on stage. It'll be another great one.
Yeah, it will be another great one. Okay. Well, Alex, as always, thank you so much for sharing your takes on the news of the week and the past few weeks with us. If you did like this episode, make sure you like and subscribe wherever you're watching or listening. And we will see you in 2 weeks' time for another edition of TechTO Quick Takes. We'll see you on the inside.
We're in the business of delivering impossible things. We're in the business of delivering things that nobody's ever seen before.
If you build that culture, you'll come up with really cool and innovative stuff, and literally could be in the next multi-billion-dollar idea.
So this conversation is largely going to be about scaling yourself and scaling your leadership team.
I want to talk about one of the biggest struggles that I think a lot of startups face early on, which is building initial traction.